The markets continue to digest yesterday's FOMC minutes. We'll be asking Peter Hug on a bonus edition of For Pete's Sake coming up. Twice in a week, how lucky can one get? Peter Hug, thank you so much for being with me.
Okay.
All right, Peter, let's talk markets. Just when we thought it was going to be a snooze fest, all of a sudden...
Well, you know, the FOMC came out yesterday. Quite frankly, my reaction to it is duh, blah, boo. I mean, they've been saying this for the past 2 months. Now that it's in writing, I think maybe people are taking them a bit more serious. But the markets had no trouble getting through resistance yesterday at the 1632 level, followed through up through the 1660 level this morning, and now trading at 1672. I think there should be a little bit of resistance around the 1678 mark. That was the level that the markets had some support on the way down. Silver could trade up to the 3120 level. I do not think a lot has changed. I don't think the Fed necessarily is going to raise interest rates. Create liquidity in the market. But just the fact that their jawboning was enough in a thin market to move it higher.
Right, Peter, yesterday I actually spoke to Vince Lancy over at Cameron Hanover, and he was saying as long as the markets insist on rallying in expectations of a QE3, we see no need to actually do one. He says that's what the Fed should really be saying. What do you think of that statement? Well,
I think it's absolutely true. I mean, I think the Fed is jawboning right here, and they're getting the results that they want. And you got to remember that a lot of the information that came out yesterday is old information. It's about 3 weeks old.
Right.
And subsequent to the FOMC meeting in early August, there's been some actually improved economic numbers. It would not at all surprise me unless the numbers turn down dramatically between now and, say, mid-September, that the Fed does absolutely nothing before the election.
Okay, so Peter, I know you said in your market commentary this morning that the markets are just thin and exaggerated.
Mm-hmm. If this was happening, I think after Labor Day, I'd have more conviction in the market. We've had a tremendous run on silver. I mean, if you just look at it in percentage terms, it's almost up 15% in the past 3 weeks. Gold hit a low of the 1570 range about 3 weeks ago. It's trading at 1670. In around the 1678, I'd be tempted to take profits. Silver, I'd be tempted to take profits around 3120. If it breaks through those levels, I think you have another 50 in gold, and I think you probably have at least another $2 in silver. But I'd probably be lightening up at resistance levels and seeing if this market pulls back. It's a thin market. I'm not sure the conviction is there yet.
So, Peter, what do you think is weighing on the rally in silver right now?
I just think there were a lot of people out there short the market, thinking that the global economy was going into collapse. Silver is an industrial metal, and they had just given up on it. And I've been saying for the past, I can't remember how many weeks, 6 weeks, that silver in the 26, 27 range just looked like it had the support and was a very dangerous market to short. The upside potential obviously bore me out. I mean, being up almost 15–20%.
So Peter, you don't think that the Fed is inching closer to pushing the button on a new round of bond purchases?
They may. I think the Fed's got other ammunition if they want to stimulate the economy to some extent. I'm not sure it's necessary yet. The unemployment numbers are bad. They're at 8.2. But some of the retail spending, is not great either. But again, we're in the summer.
Right.
It's usually not the way the Fed works that they do something ahead of an election. I think they're going to need some really catastrophic economic news to push that button.
We'll see Jackson Hole, what happens there next week. In the meantime, bring it home for us, Peter. Recap key numbers for gold.
Gold, I think the range has obviously gone up. I'm looking at a range now in gold of 1632, 32 being former resistance, now being support, to 1678. And I see silver in the range of 2970 to 3120 for probably the next week. Come Labor Day, again, when the big money and the serious money comes back into this market, again, I really do believe there's going to be a lot of volatility.
In the meantime, we'll be keeping a close eye on the markets. Thank you so much, Peter.
You're welcome.
And thanks for watching this special edition of For Pete's Sake. You can email both of us at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.